So speaking of that, how big is the foreclosure backlog? And Dalton, I think you had said this is a question you're getting a lot, so, or something around this. Like, okay, we know there's this distress out here. The you know, it's almost inevitable that if you have the highest unemployment rate since the Great Depression, you're going to see some impact on distress in the housing market. But as we all know, or most of you probably know, there's been a lot of effort to preventing that that distress from hitting, at least in the short term, and delaying that and kicking it down the road. So try to do some work here to help define that foreclosure backlog for your audience. And this is our data, just to give you an idea, because of this is really the impact of the foreclosure moratoria that are out there that are preventing anything, pretty much any agency mortgages, I should say, you know, so backed by Fannie, Freddie, or FHA is not being foreclosed on, with one exception being vacant properties. And here's the impact that's had on our foreclosure sales through our platform. You see the gray line is 2019, red line is 2020 by week. And we were pretty much keeping pace, pretty close to 2019 levels until that week 13, which happens to be the week of March 15th, where we saw the pandemic declared, and shortly after that, the CARES Act, which started the foreclosure moratorium. And so we're seeing the numbers go down to close to zero, and they've started to pick back up a little bit. But just doing some math around this, we see that you know, to try to quantify the backlog, and I go through it there in the bullets on the right, but at the end of the day, we're estimating and applying our market share to the entire market that we're going to see about, if the moratoria is extended through the end of the year, which it now has been, we would see 161,000 properties that would have gone to foreclosure auction that have not. Now, I put in the assumption there that 45% of that 161,000 is going to take advantage of the mortgage forbearance programs that are out there. And so you end up with, and that's based on data from Black Knight that says that that is the truth, the 45%. And so you end up with a number of 88,000 that, once the moratoria are lifted, would immediately go back into the, presumably immediately go back into the foreclosure pipeline. And you still have the additional ones, and we'll talk about forbearance in a second. Another way to look at the backlog is even behind the properties that are kind of already in the foreclosure pipeline, those that are delinquent. And certainly we're seeing that number pop up very high. The long-term delinquencies, 90 days plus, are continuing to rise. They have not peaked. They continue to rise in August. And this is kind of parallels this idea of the long-term unemployment continuing to rise. Even while the short-term delinquencies are down, those have come back down to pre-pandemic levels. And this is also data from Black Knight. But we do have those 90-day plus rising, and because of the foreclosure moratorium, most of those are just sitting there. They're either in forbearance or they're not being foreclosed on because of the moratoria. And so that pool is growing, and it's grown by 1.9 million over the last 5 months to now 2.36 million properties. Now, of course, 2.36 million doesn't mean those are all going to go into foreclosure after the forbearance programs are ended. We'll talk about that in a second, but that gives you an idea of that number that's building up of backlog of distress. They will need to be dealt with at some point. And by the way, you have the context of the comparison to the previous recession there too. We're not at that level yet. We were closer to 3 million, but we're at 2.36 million now. And there's a lot of information on this page, but suffice it to say, we've done our own long-range forecasts. There's some other folks out there who have done forecasts of the foreclosure wave or whatever it turns out to be. And you do see CoreLogic that seriously delinquent rate to increase by fivefold by the end of 2021. Our long range forecast aligns with that from First American that is basically showing a peak that is about triple what we were seeing in foreclosure volume. That is about triple what we were seeing before the pandemic, but still 40% below the Great Recession levels. And here's what that looks like on a chart going out to 2020, the end of 2025, or beginning of 2026. So this is where we're seeing it. Another way to look at this that actually kind of aligns with that is some data put out by Aspen Grove looking at the forbearance, programs. There's about 6 million mortgages that have gone into forbearance all time since that program began back in April. They are estimating 15%, that yellow slice down in the bottom right, will end up being foreclosed on. And we do see that it trending that way in the real-time data from the Mortgage Bankers Association, that it's trending that way. So that ends up being 900,000 properties that go to foreclosure that had gone into forbearance and then go to foreclosure. Just some context on that market. So that 900,000, in 2019, we had almost 250,000 properties go to foreclosure auction or be foreclosed on, complete the foreclosure process. And so that 900,000 would be certainly much bigger than that. There's no timing in this report, but we would suspect that would be spread over the next several years. And I would note it would be in addition to kind of there's a whole nother pool of foreclosures that are happening outside of forbearance that never entered forbearance. And so that this would be kind of layered on top of that. FHA, I think I'm short on time, Dalton, so I may need to skip over this part a little bit, but suffice it to say that FHA is unfortunately a little bit of the riskiest game in town, or has been over the last few years. It's nothing like subprime, but we're seeing that show up in the numbers. The delinquency rate is now above the Great Recession levels and the highest going back to 1979. They have less equity is what this slide is saying. This is data from Black Knight, about 4 times the number of loans, of FHA loans that are in forbearance have either less than 10% equity or negative equity. So that means there's less of a cushion for those borrowers to get out, to avoid foreclosure if they become delinquent, or they already are delinquent. And then this is that broken out by state. But I'll suffice it to say, really the point of those slides is that we are, even before the pandemic, we were concerned about FHA, and we're seeing that show up now. There's been a shock to the system. All right, so opportunity now for investors. One thing I want to point out is that even though there is this foreclosure moratorium, we are seeing foreclosures come back already. It's not, you don't have to wait till next year. You don't have to wait down the road for this inventory. It's starting to come back, and primarily this is based on our data. This is almost 100% vacant properties, which often do appeal to investors as opposed to occupied, especially with the eviction moratorium. But we are seeing the heat map on the left shows 8 weeks ending July 4th. We were seeing about 5% of year ago levels at that point. Fast forward to the 8 weeks ending August 29th, we were seeing nationwide 15% of year ago levels. So still 85% below a year ago, certainly way down, but the numbers coming back up. And in certain states, especially in the Southeast, there you see that we're seeing 30–40% of year ago levels. So there is inventory out there coming back at the foreclosure sale. I'm actually concerned about states where we're still at 0% of year ago volume, places like New York, as a example. To me, that's where you're going to see a bigger backlog. Nothing's coming through the pipeline you'll end up with a bigger backlog, which could have a more severe, longer term consequence on the housing market in those states.